Hello, everyone. Thank you so much for joining. This is Jessica, and I'm very excited and delighted to have Susan Oberbillig here on today's training in 20 minutes or less. You know, you're going to learn some information for real estate and financial professionals that covers about the home equity conversion, also known as the reverse mortgages. I know that Susan is here and has a lot of experience, has won quite a few awards out there and has a lot of experience. So I'll let you, Susan, go ahead and explain that to everyone. But before we go ahead and get into that, the purpose of this training, Susan, is for realtor partners. You know, that way they could go ahead and be a little bit educated, and not only for themselves, they can look like a superhero when they're talking to ones who may qualify for the reverse mortgage. But what we're also discovering is a lot of people out there are looking at obtaining a reverse mortgage to even look at purchasing more real estate. And then financial advisors, a lot of them have clients who want to keep on investing or don't want to stop their lifestyle. So thank you so much, Susan, for being on today's training. Do you have anything else to add to the introduction and the purpose of today's training?
I just want to thank you for including me and for your interest in learning more about the HECM, home equity conversion mortgages. I think it's going to be a really powerful tool in the future for seniors to be able to live a very incredible lifestyle and be able to continue investing both in real estate and in financial products.
Yes, I absolutely agree. Coming from the financial history and background, it's a very important loan to go ahead and be educated about. As it brings out here that AARP receives more calls on reverse mortgages than even on Social Security or Medicare combined, so this is really important information. And popularity is attributed to greater awareness and comfort with the reverse mortgage programs and increasingly tight budgets of senior adults. Most of them want to remain in their home and live in their own home. And I don't know about you, Susan, but I'm talking to more and more who would like to go ahead and buy more real estate, whether it be an investment in their portfolio or to assist family members to move into. Have you discovered that to be the same as well?
I have, and I know that there has been a common misconception out there that the reverse mortgage is more appropriate for seniors that may be struggling financially. However, it truly is a tool, a financial tool for seniors to use to, you know, enhance not only their lifestyle and their way of life, but those of their family members, and you know, in all facets. They're not pigeonholed into one particular use of the money.
You said it very well. That's really good information. And I love this photo here. As you mentioned, it's a perfect solution for many seniors out there. And any financial advisor or real estate agent listening to this, again, we want you, you know, to look like the superhero that you are. So that way you are a little bit savvy and know some information about this. You can have a conversation with ones in your community, friends, family. And as you mentioned, seniors can borrow against the equity in their own home without repaying the debt as long as they live in their home, correct? I know you and I have had conversations about that. And financial independence. And there's no monthly mortgage payments. How incredible that is. And help people go ahead and enjoy a more comfortable retirement in their own home by obtaining a tax-free cash flow. So, Susan, do you want to go ahead and discuss a little bit further about the loan proceeds and benefits?
Sure. The loan proceeds that the senior can access is either paid out in a lump sum, in monthly installments, a line of credit, or a combination of all three. And the proceeds are typically tax-free. Of course, we always advise folks to consult a tax advisor, but that is a very key component. The funds can be used for anything that the senior chooses, and to capitalize on the benefits. They would be able to maintain a current lifestyle and help them keep their home. It's an ideal for seniors that are experiencing financial difficulties, and also an ideal solution for seniors who want additional cash to optimize their monthly income.
Very well said. So we can go ahead and cover some of the possibilities in using a reverse mortgage. Some of them may just want to eliminate a mortgage payment, purchase a new home, invest with their financial advisor, pay for grandkids' college, a hedge against drop in home values. I know that's a concern for quite a few. Prevent foreclosure, pay off other non-mortgage debt, A few ways that seniors have used the reverse mortgage has also been traveling. I've heard of this, you know, actually living life to the full. I love this photo, officially retired, or just increase their monthly income, eliminate, you know, so much support that they may be relying from their children. Maybe they have home maintenance, pay for in-home care. I know that's another popular one. Pay for surgeries or medical procedures. Preserve the savings. Again, we know we're not financial advisors, but you know, a lot of people don't want to have to tap into that, and make the equity in the home work tax-free. As we can see, there is a lot of opportunity, according to the U.S. Census, that there's over 39 million people over age 65, you know, in the U.S. in 2009, but by 2050, there's going to be over 88 million, and 81% of householders 65 and older own their own homes. That's really exciting statistics because we're firm believers in home ownership, and over $3 trillion in home equity is held by seniors age 62 and older in 2010. So this is definitely a great market to go ahead and tap into. And as you and I have discussed, Susan, it definitely costs more to live now. Income sources have changed quite a bit. We're also finding that liquid assets, unfortunately, have declined. This is something that's dear to my heart, and I know your heart as well. We definitely want people to keep having that net worth and those assets. And 10,000 people turn age 62 every day. And the chance of living, which is great news, has increased. So again, more people are going to be looking at the reverse mortgage. So Susan, can you please go ahead and educate anyone in this 20-minute program some of the basics?
Sure. You'll probably hear an acronym called HECM, and it stands for Home Equity Conversion Mortgage. And the HECM loan is a non-recourse loan, and we'll go into that a little bit later, but that's a very important component. These loans are government insured, very, very similar to FHA. The loans are primarily for homeowners 62 years of age and older to convert home equity into tax-free cash used for any purpose. There is minimal income requirements and minimal credit qualifications, which is very important.
Wow, that sounds really good. Can you please tell us some more information?
Sure. No monthly mortgage payments are required. The borrower is responsible for paying their own property taxes, insurance premiums, and HOA. So it is very important for them to understand that and to ensure that those items are taken care of in a timely manner. The borrower retains ownership and title to their home. The loan proceeds are not considered income and will not affect Social Security or Medicare benefits. However, the monthly advances could affect eligibility of other programs. So it's important that the senior does consult a professional, such as an attorney, a financial advisor, or even the loan program office. Again, honing in on the fact that in general there aren't tax consequences, but you want to make sure that it doesn't affect a specific program that a senior is involved with.
I really like how you always want to refer anyone listening to experts in their own industry, just, you know, as each person is a real estate expert, financial advisor expert, and you definitely are the reverse mortgage expert. So how much can someone borrow? I know that this is a very popular question. Can you please go ahead and advise us more information?
Sure. There isn't one definitive formula. Rather, there is an algorithm that HUD has implemented whereby we would take the borrower's age. Actually, if there are a couple borrowing, we take the age of the youngest homeowner, the interest rate of which loan program they're choosing, and the appraised value of the property, and in some cases the county where the property is located. We input all of that information, and there will be a loan maximum that is called in reverse mortgage world a principal limit factor, or a PLF. And once we know that figure, we know exactly what we can lend to the senior, and then we just go ahead and put the loan together based on the particular needs of the senior and their family.
Perfect. Thank you for explaining that. And I know it's important to know that a reverse mortgage is a conservative one, which is really good. The borrowers are able to extract a portion of their equity, but it's not designed to take out everything. And as you said, the loan amounts determined by the age of the youngest borrower, the value of the property, the certain program selected, and based on current rates. What I find very exciting is it's just not a single home, but there's also condominiums and townhomes as long as they're FHA approved, a 2 to 4 dwelling as long as, the senior occupies one of the units. Manufactured homes are acceptable if it's on an approved FHA foundation, and newly constructed homes, as in other cases, you have to make sure that the certificate of occupancy has been issued. So can you please talk to us about some safety features and expand on that other page more?
Yes, of course. You may hear on some of the commercials that are being featured on TV about the new reverse mortgage. And honestly, the new reverse mortgage simply refers to the fact that they've added a few more conservative touches, making these loans just a little bit safer. Not a whole lot different about them, but just, tightening up on some of the guidelines. One of the first things that a senior will do is that they will attend a third-party counseling session with a HUD-approved HECM counselor. And this is important because that HECM counselor is not affiliated in any way with the lender, so there is no reason to believe that they're not getting the best possible answers to their questions with no coercion to take a loan out. The loan is an open-ended loan, and it's actually managed, believe it or not, to the 150th birthday of the youngest borrower. There's no penalty for early payment. There are origination fee caps, and any remaining equity does belong to the borrower and the heirs. One mention that we have of a safety feature is that it's a non-recourse limit, which means if the home were to be sold for less than what the borrower owes, the amount that's different is not repaid by the heirs. It's actually covered by an insurance policy and guaranteed by the FHA and HUD.
Wow, that's very impressive, because I know some heirs may be concerned about that, and so that's really good. And then I know that a power of attorney, can you go ahead and talk about the POA a little bit?
Yeah, it's important to find out if a power of attorney is needed. If it is, we just need to review it. It needs to be real estate specific, and we need to review it and get it approved by the lender up front. But it is advisable with a POA that they select a trusted family member or an advisor. It's important if the borrower becomes incapacitated. And as mentioned, we just need to make sure we approve it in advance, so we don't want to find out at the last minute. Otherwise, it might delay the closing.
And I know you're all about not delaying the closing, and you have a stellar reputation about that, so that's really good. And a common question is interest rate options. What is available, what is out there? And there's a HECM fixed rate, where the rate remains fixed for the life of the loan. And then, variable, so any adjustment in the rate has no effect on the amount or number of loan advances that the customer can receive, but can cause a loan balance to grow at a faster or slower rate. It indexes with multiple margins to choose from. The initial interest rate is one component that will determine the PLF on either option. Do you have more information to discuss about that?
Yeah, and again, once we sit down with the family, we can decide what is probably the most appropriate course of action. And depending on the goals of the fixed or of the HECM, we can decide whether a fixed rate is better for the family or an adjustable. And we can discuss the mechanics of how each loan works to make sure that there's a full understanding and that they're comfortable moving forward with either one.
And what I value about you is you truly care, and you like to take that time. You have a stellar reputation for that. So as we mentioned, the great thing about this, the HECM for a purchase, is sell more homes. It obviously helps out the real estate agents, allows buyers to combine reverse mortgage proceeds with a down payment to purchase a home, minimal income and credit qualifications, which is a lot of concerns, and provides more power in purchasing. So improving this purchasing power, converting renters to buyers, no seller concessions allowed. This includes the owner's title policy. The buyer must pay for this fee. And the benefit to the buyers is no monthly mortgage payments. Who can't, beat that? I, find most people enjoy not paying a mortgage payment, and less upfront investment than a cash purchase. So is this
Yeah.
what you have found with Realtor Partners as well, Susan?
Yeah, I think it's important to note a couple of key opportunities on this particular slide is that there really aren't seller concessions allowed. So when a realtor is putting a deal together, they need to make sure that they take into consideration with the purchase price any seller concessions that they might have built into otherwise. Additionally, as mentioned, the owner's title policy, which in the state of Colorado is typically paid by the seller, is actually a borrower charge for a reverse mortgage. So again, a realtor will want to know this up front so that they can structure their deal properly in terms of sale price. The other key component on this slide is that in order to achieve no monthly mortgage payment, you really have two choices. You either can put all cash down, or you can take out a reverse mortgage. And obviously with a reverse mortgage, you're putting less cash down. So I guess to summarize, you can truly get into a home with much less of an investment than if you want to go all cash.
Okay, that's perfect. So I know we've got some more great information to share here in just a short amount of time. And as we mentioned before, a condo or townhome must be FHA approved. And who is a typical buyer using a reverse mortgage? It's someone purchasing a primary residence, limited income, debt qualification, preserved capital, don't need to leave a legacy to the children or as big of a one, ones who want no mortgage payment. You know, it's a win-win. And there is a disclosure that's signed that the entire amount of the proceeds will not be used for an annuity. It's not monitored. Proceeds intended for financial investment are commonly used for IRAs, life insurance, estate planning, annuities. And I do want you, Susan, to expand that a little bit more on the proceeds for the annuity.
Okay, well, so if in addition to a borrower wanting to use proceeds to purchase a home, they may also wish to elect to take some of these proceeds and to invest. And there is one disclosure that a borrower will sign, and it just basically says that they do not intend to invest the entire amount of their proceeds into an annuity. I'm not entirely sure, you know, where that particular stipulation came from, but it is a disclosure that they will confront. Obviously, it's not monitored, but what HUD is really trying to say is they don't want somebody, you know, pulling out cash and putting all their proverbial eggs into one basket. But in general, for a financial planner is probably going to work with the senior to ensure a good investment in terms of IRAs, life insurance, estate planning, and annuities.
Very well said. So the loan is not repaid, which this is fantastic. Repayment is due, though, when they move, sell, or pass away. Or if there's failure to pay property taxes, failure to have hazard insurance, maintain the property, or if they decide to make it a rental or permanently move out of the property. And a lot of people have concerns over the bank owning. Well, the bank doesn't own the senior's home. The senior still retains title and ownership. So that's great for heirs. There's no possibility of foreclosure as long as they, you know, as we talked about, keep it as their primary home, keep the homeowner's insurance and pay their property taxes, and they're not passing debt onto their heirs. And a reverse mortgage will not affect Social Security and Medicare. You said loan proceeds are non-taxable, but always talk to a tax advisor. This is another common question. Does a senior need to be in good health? Well, no income, employment, credit score, health requirements. Assets are not required to be verified unless the loan is a purchase loan. And a reverse mortgage is not expensive. You and I actually ran across this question yesterday. You know, someone felt they were being taken advantage of, and it's really sad to see that that's out there. But the upfront cost of reverse mortgage will cost more than a traditional loan. However, they are HUD and FHA protected for the borrower. The bank does not make money from these costs. It's just there to get the loan processed and to protect the borrower and their heirs as well as the bank. So it's definitely a win-win. Here's a page if anybody wants additional information. It's great information to go ahead and look further into it. I do want to go ahead and talk a little bit about Susan the last minute or two. The process is easy. She is a specialist in reverse mortgage along with many other areas. And if you ever have any questions about it, do reach out to her on a fun note, she's been in the mortgage real estate industry since 1988. I always say experience matters. You know, she graduated from economics and finance. She's the president of Paragon, has a great reputation. She offers consultations. It's her gift to the world, and she's a mother to 2 beautiful children. And here's her contact information. Her office is 303-727-2407, or go to paragon-loans.com. Again, that's paragon-loans.com. And, you know, Paragon is not endorsed or acting on behalf of the government or anything. The whole purpose of this is just to educate you. Do you have anything to add as we wrap up here, Susan?
No, except to say, you know, it is my sincere privilege, Jessica, to work with you, and also would be my privilege to work with anybody else just desiring to learn more. I'd be happy to educate and see if this particular loan is, you know, yet another tool for our professional partners to use to put good people into good homes and to make good investments.
Perfect. Well, thank you for all the gifts that you share this world, and thank you for each one of you for tuning in.